I'm Ashton from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Jeff Dorman, the Chief Investment Officer of Arca. Jeff, thank you so much for being on the show. It's a pleasure to have you here today.
Thanks for having me, Ashton. Pleasure to be here.
You're very welcome. I'm excited to learn a little bit about Arca today. But first of all, could you give some background on your expertise in traditional finance and cryptocurrencies, and then how you're applying that to the investment management at Arca?
Sure. Yeah, I've spent a little under 20 years now in my career in and around finance and technology. So I started my career as an investment banker at Lehman Brothers. From there, I went onto the trading desk, and I was a trader of high yield and leveraged high yield bonds and leveraged loans at Merrill Lynch. And then I went to the buy side. I worked for Citadel as well as a couple other smaller hedge funds, always managing debt, equities, in pretty much every asset class and every region around the world in some capacity. Up until about 2013, I did that. So that was the first 13 years of my career. And then I moved on and I helped build a fintech company called Harvest Exchange, which was a service provider helping the asset management industry. So I basically went from the investment side to the service provider side, but I've been in and around asset management and technology my whole career. In terms of applications of that to what we're doing now, so I got into crypto in 2016 when I made my first personal investment. It was really just a hobby at the time. When I was building Harvest Exchange, we had 10 full stack developers on our team, and all of them were using GitHub every day. A lot of them were mining for Bitcoin or Litecoin or Ethereum. So I learned a lot about open source code through them. I learned a lot about open source code and how the developers were really thinking about building this new world of technology. And that's when I started investing personally, but I never really thought of it as more than a hobby or an investment until 2017 and 18, when I met my partner, Rain Steinberg, who was the co-founder of Wisdom Tree prior to starting Arca with me, as well as Phil Liu, who is one of the best securities lawyers in the industry. And he was very interested in blockchain and what it means for the new world finance. So that's when I really brought this together as a career and not just as a hobby. And we come at it at Arca slightly differently maybe than some other people in this industry. A lot of the grassroots part of blockchain and crypto have been developers and coders who are now learning how to do finance on top of the technology that they understand. We come at it the other way, which is we're finance guys. We're old guys who have done this before in finance, and we think we can apply everything that we've learned in asset management from a regulatory standpoint, from a compliance standpoint, from a risk management and fiduciary responsibility standpoint. And we think we can learn and apply that to the crypto space in the same way that you would with any industry that you learn from scratch.
That's great, Jeff. And with that said, what is Arca's principal investment thesis when they're deciding which investment products they're going to be offering throughout the digital asset space?
Sure. Our main goal at BlackRock is to be a full-service asset management firm that is focused on bringing people into the digital asset ecosystem. And we do that through two channels. We have investment products where we are actually giving investors exposure to the digital assets through investments. So that can be investments in tokens and cryptocurrencies themselves. That can be investments in the equity of blockchain companies, but basically giving investors exposure to this asset class as an investment. And then the other side of our business is we're actually using the blockchain underlying technology to build the infrastructure of new investment products. So in this instance, in that side of the business called Arca Capital Management, we're just using blockchain as the wrapper in the same way that an ETF is a wrapper. The ETF itself didn't invent anything new. It just made investing in existing asset classes easier, more efficient, and cheaper. We think the blockchain wrapper is going to do the same thing, and it's going to give investors better access to equities and fixed income and real estate and hard assets that in other ways has been harder to access or harder to transact in. So the goal of Arca is really to have a full suite of investment products that has different risk and return profiles for different investors, so that eventually any investor of any size, retail and institutional, can have a product that fits their needs.
That's great, Jeff. And if you could elaborate a little bit more on the token side and those investment products, do you guys just offer simply investments into Bitcoin or like top 10, maybe indices or even lower market cap coins? Where do you guys lay in that?
Sure. So on the Arca investment management side, where we have private funds that are only available to accredited investors and qualified institutional buyers, we have actively managed funds where we're investing in different vehicles with different strategies with different vehicles. But the main flagship strategy that we invest out of is the Arca Digital Assets Fund, where we have long only event-driven, research-driven approach to investing in this. So we invest. Bitcoin is one of the investments, but we'll look at anything that we believe has a fundamental reason for existing and has a token that actually accretes value as the company or the project grows.
Mm-hmm. Great. And what would you say is the main differentiator between Arca and some of the other investment management platforms that are now entering the digital asset space?
Well, like I said before, Arca is a group of financial professionals. In addition to myself and Rain and Phil, we have a whole team of ex-financially minded people. So anything from, we have a KPMG ex-international M&A banker, we have lawyers, we have venture capital analysts, and then we also have people who are crypto native and developers and really into the software. But the biggest differentiator is that we've all done this before. We've done this in other asset classes. We've done this with other products. And we really take that approach, which is compliance first, regulatory first, doing this in the same way that we've done other products in our career across equities and fixed income and real estate and everything else, and just applying it to this new asset class. So, the underlying strategy, there's hundreds of firms out there. There's certainly different types of strategies, and some are better than others. And I'm certainly not here to tell you who's good and who's not, or what the real, all the nuances of those differences. But I think where Arca comes out is we want to make investors comfortable, and we do that because we've done this before and we know how to do it in this space as well.
Mm-hmm. That's great. And now recently the SEC came back to Arca and had rejected the Bitwise ETF, which is one of the Bitcoin ETFs that has been in the works for a little bit here. Could you give your opinion on why this was rejected? I read that they were saying Bitcoin has a lot of fake volume, so that was part of the reason they decided that. But what's your opinion on this ETF? Did they make the right decision? And how is that going to affect the Bitcoin and the cryptocurrency space right now?
Sure. And just to clarify, I think you said they came back to Arca. They didn't come back to Arca. Arca has nothing to do with this ETF. But in terms of what they did come back with, I mean, first of all, I think the Bitwise team has done an amazing job. I think the research they've done, the evangelism for the space they've done, everything they've done has been great. And that actually goes further than just Bitwise. That's to Van Eck and everyone else in the space who has been trying to push this through. But my personal take is that it probably made sense to be rejected right now. I don't think the market is mature enough yet. All of the factors that Bitwise used in their research report to help the SEC get comfortable with the 5% of the market that was not faked and manipulated was great. But the SEC clearly focused on that other 95% that does have fake volumes, that does have wash trading, that does have price manipulations driven by a handful of people. So I think it makes sense right now for the SEC to reject this until these clarifications are done, until they're more comfortable with it. But it's also important to remember that the market doesn't need an ETF, right? The only people who benefit from an ETF are financial advisors who have very specific mandates and rules around what investments they can put their clients into. The reality is anybody can go buy Bitcoin right now. You don't need an ETF to do that. So you have this chicken and egg scenario where was crypto built so that we can just fit into the traditional legacy system? Or is crypto supposed to be a way to get away from the traditional legacy system? And if you believe the latter, you don't need an ETF. If you believe the former, then I think ultimately this market needs an ETF in order to do that. But I'm in the camp that eventually the financial advisors will learn how to put their clients into Bitcoin the way the rest of us are doing it, and not need a legacy tool in order to do that.
Very great perspective, Jeff. And that also leads me to think about the backed ETF, which was recently approved. And to most people in the crypto space, they saw what they thought was a lackluster performance on its first day. Seemed like, a few dozen Bitcoin were traded through it. And people, of course, were hoping, it was going to take Bitcoin to the moon or something spectacular was going to happen. But that didn't really work out, but it looks like it's growing now. Do you have any thoughts on the approved ETF, and is that one enough, or eventually these Bitwise and VanEck ETFs will come in, and does that make a difference?
Well, so, I'm sorry. With Bakkt, I think you're referring to their futures platform, not an ETF. But yeah, I think Bakkt's new initiative, first of all, has the backing of a giant in the industry, right? NYSE and ICE has done this before and has done it in massive size and is one of the most trusted counterparties in all of finance. So to bet against them, I think, would be foolish, as well as short-sighted to do it only after a month or two of initial rollout. In general, people in crypto, I think, have unrealistic expectations of how long things take. It's really hard to build new products. It's really hard to onboard clients, even if you have been doing it for 10, 20, 50 years, like a Bakkt, like an NYC ICE, or even like a Fidelity. It takes time. I mean, it takes customers a long time to get comfortable with something new. And most institutional investors are not going to rush into anything until they see some progress. So I wasn't expecting this to be, guns blazing right out of the bat. I thought it would take some time. I think a lot of customers have done their due diligence, and they're going to start their onboarding process once they see how it works. And 6, 12, 18 months from now, you're going to see some real growth there. But I definitely think a lot of the issues in crypto right now are based on these unrealistic timeframes and these unrealistic expectations. And I think it's time to walk those back a little bit and understand that the institutional world doesn't work like the retail world. This isn't a consumer product where you hear about it from a friend, you sign up, and immediately you're using it. It takes a long time for institutional investors to do anything, because they have a responsibility to their clients or to their customers or to their fiduciaries in certain aspects to make sure that it's foolproof.
Definitely, and there's definitely a lot of education that's needed around the space, and especially trying to incorporate traditional finance with cryptocurrency. And a lot of the people in cryptocurrency aren't educated on how the traditional finance system works, and they're trying to, learn that as well. So for your clients, have you guys incorporated a level of education into these new digital assets? Because a lot of people don't understand the nature of them, and it really is an entire new asset class. So how are you guys adding an education aspect into the products that you provide and the investments that you make?
Yeah, and education really is key. You hit it on the head. I mentioned my partner, Rain Steinberg, who's our CEO at Arca and also was a co-founder of Wisdom Tree. And a lot of people just think ETFs popped up kind of overnight, and they didn't. It took 7 to 8 years between getting exemptive relief from the SEC, as well as having investors understand how the product worked, to the distribution and marketing of them. So it takes time and it takes education, and then eventually it becomes mainstream, and you don't realize that there's that backstory or there's a history behind it. And I think digital assets are the same thing. Anybody in this space who is trying to grow the industry has an obligation to help educate new investors into the space, because I don't know a single person who started in this space and understood crypto right away and said, "Yep, I got it, let's go." Most people, were skeptical at first. They said, "This doesn't make sense," or "I don't understand what you're doing." And then eventually they spend enough time reading and learning and talking to people that they understand that this really has an incredible use case and is going to be transformational across the next couple of decades in terms of finance and money, as well as just asset transfer. So what we do at Arca is we do a lot of events and content for different groups of people. So we have a podcast called Base Layer that my partner David Nage runs, which is inviting leaders in the crypto ecosystem to discuss their products and their projects and what they're doing to help family offices and institutional investors understand what investable assets are out there. We do a weekly blog called That's Our Two Satoshis that you can get on our website, which is not getting into the nitty-gritty of how blockchain works or how the technology works, but comparing blockchain and crypto as an asset class to traditional asset classes like fixed income and equities, where investors are more comfortable. We also do periodic conferences and events for small groups of institutional investors. We do monthly investor letters for our funds. We do webinars to discuss macro landscapes as well as developments in the ecosystem. And we found that the open rates on some of this content is higher than you'd ever believe, in the 70, 80, sometimes even 90% range, which shows you that investors do care about this space. They really are interested and they really are willing to learn. They're just not necessarily ready to allocate yet. And again, going back to patience and unrealistic expectations, I think there's a lot of people in the space who think that if you meet an investor in a coffee shop for 30 minutes, that they're going to write a check to you before they leave the room. And the reality is, it's going to take 18 to 24 months of real due diligence in this space to not only understand the investments, but understand who are the service providers and how does how does blockchain even work and who are the managers in this space. So in the traditional world, I remember, let's say a pension fund or an endowment has a mandate to invest in a long short equity fund. It may still take 12 to 18 months before they do their manager search and figure out who they're going to invest in. And that's when they already know exactly what equities are and they know they have a mandate for long short equities. Well, imagine that same 12 to 18 month process of manager due diligence, except every single manager you've never heard of, every single service provider you've never heard of. You don't even safely know how to store digital assets, and you may or may not even have a green light to invest in this new asset class. So that's just going to take time. And during that time, it's our job and everyone else in the ecosystem's job to continue that educational process.
Mm-hmm. That's great. And we're definitely early days. So what is Arca looking for right now as they continue to grow? Are you guys looking for strategic partners, more team members, or just more clients?
Sure. I mean, we're an asset manager, and asset managers grow their business through new product offerings and ultimately through new assets under management. So we are always looking for assets into our various products, but you don't get assets into products without having a strong team. So we're always looking to hire good people, whether that's people who are more software and development focused, or people who are business development focused, or people who are investing focused. We're looking for people who really cross that bridge between technology and traditional finance, who want to bring digital assets into the world with us.
Great. And how can they reach out and learn more information?
Sure. Well, on our website, which is ar.ca, they can look at all the different product offerings as well as sign up for our blog. And they can also reach out to us at info@ar.ca if they're interested in talking to us.
Great. Thank you so much, Jeff. I'll leave those links in the description box below. That's all the time that we have for this interview today, but it's been a pleasure speaking with you, and let's follow up in the near future.
Likewise, Ashton. Thanks again for having me.